Okay, good evening, Mr. David.
Good evening, sir.
So, for me, it's not nice that you just be looking for, you just maybe stay comfortable on H4 time frame or lower time frame, looking for fantastic 5 year and there. So it's fine. If for me, I'm not comfortable looking for fantastic 5 in the lower time frame. I want to know the trend of the market. I want to know where is the market going so that I will be comfortable to look for fantastic 5 BS manipulation entry formula in line with the trend on the lower time frame. All right. So
Okay, sir.
in this today mentorship, I'm going to teach you how to do top-down analysis, how to analyze the market using fantastic 5, blind spot, manipulation entry formula, the knowledge of market structure, and what market structure synchronization means, multi-time frame market structure analysis. Where is the market going on the weekly? Where is the market going on the daily? Where are we on 4 hours? Is the market going bullish? Is the market going bearish? That is why sometimes I infuse zone of sensitivity. But sometimes when you focus so much on zone of sensitivity, you will not be able to notice fantastic 5. Sometimes fantastic 5 happens before those zones we mark, right? So I'm just trying to see how I can infuse zone of sensitivity, but I want you to understand how to analyze the market with the naked chart, just using market structure, fantastic 5, and that is that for that. So if you can understand how market move in respect to fantastic 5, because you have to understand that this fantastic 5 happen in all time frames. And I don't know what is special about this fantastic 5. First of all, shout out to Nora Karim, the founder of Bastra, for this knowledge. Yeah, I don't know what is special about fantastic 5, but I realized that the big players respect this fantastic 5 in all time frames. Whenever you see this fantastic 5 anywhere, market tend to respect that fantastic 5. You don't need to understand how to analyze the market in respect to this fantastic 5, and then you know the direction to which you want to work. You want to look for those fantastic 5. So now let's use NZD USD. If there is much time, you can use other pair to analyze the market using market structure and fantastic 5. I want you to understand that when the market is moving in an uptrend, when the market is moving in an uptrend, it also moves in respect to fantastic 5. When the market is moving in a downtrend, it also moves in respect to fantastic 5. So when you see fantastic 5 on daily weekly time frame, maybe you spot one of the fantastic 5 on weekly time frame, it is basically it is an opportunity for you to swing, because you know that when price respect that fantastic 5 on the lower time frame, is going to be like a lot of opportunities on the lower time frame, and you can even hold that trade for a very long time. So now let's start from weekly time frame without much ado. I wanted to use MT5, right? But it's fine. We can use this. We can use this. So are you there?
Yes, sir.
So if you look at market structure wise on this USD, you'll agree with me that from this point here, the market is actually in a downtrend market structure, right? So if you look at
Yes,
this,
sir.
this is a high, this is a high, this is a low, or we can say, yeah, this is a low, this is a lower high, lower low,
So,
this is a lower low, lower high, lower high. Then the whole of this is a lower low, right? And then the market went back. So and from another lower high, but ever since the market has been dropping, the market has been failing to break this low here before the market started tanking up. So whenever you see a market moving bullish, there is always something that is happening on the higher time frame. So that is why you need to consult the higher time frame in everything you do. So if you look at the market structure wise, we are in a downtrend, right? So now if we are trading this movement on a lower time frame like daily H4, we are going to see characteristics of a downtrend, and this characteristic of a downtrend also move in respect to what fantastic five. We can see a scenario 2, we can see a scenario 1, we can see a Quasimodo reversal. You can see a lot of them. So if you are looking for those setup, you know that from the higher time frame, the market is tanking down, the market is moving down. And also remember this movement on daily, on weekly, like this. If you go to the lower time frame, like daily, we are going to be seeing characteristics of a downtrend. And when weekly is retracing, we're also going to see characteristics of an uptrend. So when we are trading a retracement from the weekly, we know that, okay, even though we are trading from the weekly, it is since it's a weekly retracement, it's going to be a lot of buying opportunity on the lower time frame. But it doesn't mean that we don't know the overall trend of the market. So if you see this impulsive move down, you'll see that on the lower time frame, daily H4 characteristic of a downtrend. When H4 like this one, weekly is making retracement again. If you go to the lower time frame, you're also going to be seeing characteristic of an uptrend. This is how multi-time frame market synchronization works, right? So now, if we know that, okay, the market went up from this point to this point, and then the market is reacting from this lower high, yeah, and the market is dropping down. So with this information, what are you going to be doing on the lower time frame? On the lower time frame, like daily, come on, what is going on with your background?
So this thing is breaking or is breaking.
Can you hear me?
Yeah. Hello, sir.
Can you hear me?
I cannot hear you again, though.
So what I'm trying to say is that from the higher time frame, you know that all of this movement was a retracement, and the market got to this lower high, and the market started tanking down. So let's see, like in the lower time frame, like I said, from this movement bearish, on the lower time frame daily, we are going to be seeing characteristic of a downtrend on H4. And this characteristic of a downtrend, when market is going in a downtrend, is also moving in respect to what? In respect to fantastic five. The market cannot move without giving up fantastic five. So do you understand, right? Hello?
I can hear you, sir.
I said, do you understand?
I understand. You said the market cannot move without giving us fantastic five.
If you say you understand, that is fine. Let's continue. So let's see how the market, from this point that the market was dropping on the weekly time frame. We know that the market is moving down from the weekly time frame based on market structure on weekly. So let's go to daily. Okay. So from daily time frame, what do you see here? We are seeing characteristic of a downtrend, right?
Yes.
Are you there? Hello?
Oh, no.
So you can see that the market is moving in a downtrend, giving all characteristics of a downtrend. But within this movement, can you spot, we can spot fantastic five in line with what? In line with the trend of the market. That is why I said Don't just go and sit comfortably on the lower time frame and be looking for fantastic five. This is how to analyze the market using the knowledge of fantastic five and market structure, right? We have a Quasimodo. When the market was dropping, this is a low, this is what a high, higher high, lower low. And then we mark that high where the market was moving up like this. So when the market got here, we know that we are what? We know that it is a Quasimodo reversal. We are going down because of what? Market is coming from the weekly time frame, market is dropping. And when market is dropping from the weekly time frame, the Dow theory is going to be breached. So when the market was moving in an uptrend like this, the market was giving a characteristic of an uptrend. And now, when we understand that the weekly time frame, let's go to the weekly time frame, guys. So we understand that this movement, let me clear that chart. You understand that this movement, all of this movement from the weekly is just a retracement. This is a high, this is a low, high, lower low, then market was going to form another higher high. So all of this was actually a retracement from the weekly time frame, right? And a retracement from the weekly time frame, we are going to be seeing characteristics of an uptrend on the higher time frame. So now, look at that retracement. Look at that retracement, giving us characteristics of a downtrend, characteristic of an uptrend. So the moment the weekly time frame started dropping, what the first sign to see is that the Dow theory will be breached from the daily or from the H4. So from the H4 daily time frame, we can clearly see that the Quasimodo. What does Quasimodo mean? Quasimodo means what? Reversal. It is a reversal because of what? The market is actually a downtrend. All of this was a retracement from the weekly, and we are tanking down to continue in another impulsive move. Impulse correction, right? So when we see this, we are going to be comfortable to take this trade. But from this movement to this point on the H4 time frame, is going to be another opportunity for us. We are not going to be like depending on the daily time frame, right? From this movement to this movement here, we are also going to, this one here, we're also going to be seeing characteristics of a downtrend on the H4 time frame in respect to what? In respect to Fantastic 5. So when you know the direction of the market, you will look for Fantastic 5. In fact, Fantastic 5 will be thrown to you in the direction of where the market is going. So that is why I said, do not sit on the lower time frame, M15, M30, busy looking for Fantastic 5. Do your top-down analysis in respect to market structure, in respect to the Dow theory, in respect to Fantastic 5, because market is moving in respect to this Fantastic 5, right? So from the daily time frame, let's use the daily time frame to explain. So first of all, we get a Quasimodo, and then the market comes here, drop, the market went back again, then finally drop. So when the market drop, they give us another setup. Like I said, when the market is moving in a downtrend coming from the weekly impulse, the market also move in respect to Fantastic 5. What do we see here? We see another, this is SNRC1. SNRC1, what does this setup means? Means that this trend is likely to continue going up. SNRC1 is a trend continuation, right? It's a continuation setup. So after a Quasimodo, price drop, then price retrace, clearly a downtrend movement, but this downtrend movement is moving in respect to Fantastic 5. Also, when you understand the trend of the market, even on the H4 time frame, you also move in respect to Fantastic 5. That is why I said you can use Fantastic 5 to do your top-down analysis right from monthly to H4 time frame, even to the lower time frame. Then you will know how to, start taking your trade in respect to the direction of the market. So when we see this SNRC1, what does that mean? It's telling us that this market is going to continue going down. And the market finally, after retracement, if you look at the retracement from the daily, I mean, this retracement, this is impulse. Let me not confuse you guys. Let me not confuse. This is impulse correction. So this impulse, we are also going to be seeing characteristic of a downtrend within this impulse on a lower time frame like H4. So the retracement as well, since the retracement is deep, we are also going to see a change of character on H4, right? But it doesn't mean when we see a change of character on H4, market want to change and start tanking up, because we relate different time frame and also in respect to Fantastic 5, we know that the market is just moving up to respect the SNRC1 on daily. So I'm still going to show you, and the market respect that SNRC1 and drop down. And then all of a sudden, the market started giving us a kind of double top to start shooting up. What causes this double top? What causes this double top? What makes the market to start shooting up now? The market has changed from a downtrend. The downtrend has been breached from H4 on, I mean, from the daily time frame. The market is pushing down. Like when you go to the higher time frame, you will see the reason why this market started pushing up. There is something happening. And also, because of the knowledge of Fantasy 5, it was one of the setup on the monthly and the weekly time frame that causes this change of market direction. That is why I said if you have understanding of Fantasy 5, you can use Fantasy 5 to do your analysis right from the monthly time frame to the lower time frame, and then you start taking your trade. Don't just sit comfortably on the lower time frame looking for blind spot, Fantasy 5, M15, M30 to sell, to buy. That is why most time this setup fail, because you are seeing this setup against the trend of the market, right? So now let me clear the chart. So let's go to the H4 time frame. If you look at the H4 time frame, you see this impulse on the daily is giving us characteristics of what? Let me show you also. Like I said, this impulse from the daily time frame, this is impulse, like I mean, this impulse, this one, and this one here. We are going to be seeing characteristics of the downtrend because we understand the trend of the market, because we relate weekly, daily, H4. We know that from the H4 at this point, I mean, we know that we are moving the weekly, daily, and H4, we are moving down bearish, right? And when we see Fantastic 5 in line with the bearish direction, we are going to win. Our trade is we are going to have more wins than losing, right? This is how to use purely knowledge of Fantastic 5 and market structure to analyze the market, to do your top-down analysis, because market move in respect to what? In respect to Fantastic 5. So if you look at this impulse on the daily from the what is this? Let me remove this one, guys. Okay. Okay. You see that impulse? We are having characteristics of a downtrend like this on the H4 time frame. And this is a lot of opportunity. And when you go to the lower time frame, this is when you start looking for what? You start looking for Fantastic 5 in line, M30, M15, in line with the trend of the market, right? So let me zoom the chart. Can you hear me?
Yes, sir.
Yeah. So if you look at this chart, you will see that even when the market is moving down, there was a blind spot. Also, there was a Quasimodo. There was a blind spot, there was a Quasimodo, and a lot of things happening here. Fantastic 5 in a lower time frame. You know, when the market was in a retracement on daily to come and activate the daily SNRC1, the market changed structure here, and this structure give us a blind spot. So when this blind spot happen, you know that you are going to buy this market, but on daily is a retracement. But you are only going to buy this market. Your target is going to be where? It's going to be at the daily SNRC1, which is this one. at the daily SNRC1 here, which is this one here. So the moment the market entered this daily SNRC1, you take your profit, because when the market gets here, the market got respected and dropped massively, right? So now let me show you what causes the move. Right now we are in an uptrend. So what causes this move? What influences this the Dow theory to be breached on the daily time frame and even on H4 time frame, right? Whatever happens on the lower time frame, comes from the higher time frame. That is why you need to relay what is happening on the higher time frame so that you know. So if we go to, are you there?
Yes, sir.
If we go to the higher time frame, are you seeing how I'm analyzing the market in respect to Fantastic Five, market structure and Fantastic Five?
Yes, sir. But my this thing, not every I did not get everything. Maybe when you post on YouTube now, from there I will get the video.
Don't worry. I will send you the video. Why would you wait for me to post on YouTube?
Okay.
I will not even post it because this is premium explanation, right? So what influences this move
Okay,
is
sir.
when we go to the weekly time frame. Let's go to the weekly. When we go to the weekly time frame, you see, when this market impulse, correction, and then the market drop from, it was this Quasimodo that we sell on the lower time frame, on the daily time frame. It was clear on the daily time frame, right? And then the market dropped down. So what causes this move up is this rally-based rally, this demand area. So this is what we call manipulation entry formula. This is a rally-based rally here. So the moment the market entered deeply into this zone, the market started tanking up. Why is it a manipulation entry formula? Because on the weekly time frame, that is why I say market move in respect to Fantastic Five. The reason why the market is moving up is because of what manipulation entry formula on weekly. This is a rally-based rally. So manipulation entry formula is a situation where we have rally-based rally or drop-based drop in a lower time frame, and in a higher time frame, we have bullish or bearish engulfing candle. And the rally-based rally or the drop-based drop is formed inside that bullish or bearish engulfing candle, right? So when we go to the higher time frame, when we go to monthly time frame, you'll see that this rally-based rally, this one here, form inside engulfing candle on monthly time frame. So let's go to the engulfing monthly. The network. Okay, can you see? We have on the monthly time frame, we have bullish engulfing, right? And the rally-based rally we found on the weekly time frame is what formed inside the monthly bullish engulfing. And that is why the market has been receiving a lot of buying pressure from this point. And you look at the monthly candle, everything is tanking up, right? So this is the reason why the market is moving up. So when you understand this, you will know from even before this week, even last week, you will know that the market will start moving up because the market has entered manipulation entry formula, right? From market structure wise. So now let's go to the daily. And from the daily, the moment market entered that manipulation entry formula, what happened? First of all, the market formed a double top here. So the market formed this double top here. And then the market dropped again before the market finally started shooting up. But what influenced this drop? Look at this market here. From the daily, look at this manipulation entry formula here again. So which means that this one would have been another selling opportunity because of what? You know that there are going to be a lot of sellers here coming back down to this zone where you will finally start looking for started looking for buying opportunity. From when you look at this chart, you see that the market is not moving without giving us a sign of fantastic five. And when you see all these fantastic five on a higher time frame, on a lower time frame, you are going to kill the market, right? Because this one becomes your direction, all right? So if you look at this, is another manipulation entry formula that prevent this market firstly to break. The market drop back to the zone. Where is this zone coming from? Coming from weekly manipulation entry formula before the market form a big double top and then the market finally breaks. So when you go to the weekly time frame, you will see that this was what? This is a bearish engulfing. This was a bearish engulfing. So that bearish engulfing, that manipulation entry formula on daily form inside this weekly bearish engulfing. That is why the market got to this point, drop back before finally start shooting up. So it would have been another selling opportunity, a lot of profit for you in the lower time frame, right? This is where you start looking for entering in the lower time frame. And then the market finally break. Because of that manipulation entry formula on the weekly, the market form a big double top, and then the market finally what? Double top. This is what we are called M formation, right? I mean, this is the W, this is the neckline, and the market break. So at that point, we can see that this was the bearish engulfing candle that come from where? Come from this manipulation entry formula. Come from this manipulation entry formula into the zone, right? So, and then the market started receiving buy pressure from manipulation entry formula on the higher time frame, and then another blind spot occur. So when this blind spot occur, it is a sign that we are going to be going bullish, because blind spot also is a reversal signal. This is where the confirmation of that weekly manipulation entry formula tell us that, okay, the market is going to at least start pushing up. So with this would have been your entry. You know, we don't enter from the lower, from here. Here would have been a huge opportunity in the lower time frame, right, for you to buy. So when you go to weekly, I mean H4 time frame, you will see that the market, this is where, if we are using zone of sensitivity, you would have marked this one as your zone of sensitivity. But actually, where you mark as zone of sensitivity is when you consult the higher time frame, we know that the market is coming here, it's just retracing to start buying. Why? Because of what? Daily blind spot. We find blind spot on daily, and we are going to start looking for entry confirmation on the lower time frame for us to buy, and would have been in another profit. Now the market move up again to this point, and then the market make a retracement. So if you look at that point again, you also see that the market make a retracement. While the market was pushing up, the market formed another rally-based rally before the market drop. Respect the rally-based rally. What is there? That is another manipulation entry formula on the H4, that maybe you take your profit somewhere and the market is retracing back. You know that they are coming back to this manipulation entry formula H4, because the higher time frame has given you the direction that you should be looking for what buying opportunity. So in this wise, you are not thinking if this manipulation entry formula is going to hold or not. So welcome back.
Okay, sir.
Yeah. So when the market respect the blind spot on daily, the market buy at this point. And then before the market buy, the market created another rally-based rally. And then maybe you take your profit here, and then the market started retracing down. When you see this rally-based rally, you're supposed to check, you will check on the higher time frame if that is a manipulation entry formula. So when we go to the daily, you see that it is another manipulation entry formula from the weekly. This is a bullish engulfing here from the weekly from the daily, that causes. So by the time you confirm, you know that your next action, you are going to start looking for another entering opportunity from this H4 manipulation entry formula for you to buy, right? So if you look at, this is how market move in respect to Fantastic 5. This is how the market actually moves. So on the daily time frame now, what do we see? The market has breached. There's a blind spot here, right? So market actually move. It's not every pair that respect Fantastic 5. So I will also tell you the pairs that respect Fantastic. There are pairs that move like that without respecting Fantastic 5. This is a new setup now that we expect market to come. Maybe not tomorrow because this is daily. Maybe not tomorrow. Tomorrow is the last day of Friday. Maybe by Monday, the market is going to come back here, and then we start looking for what? We'll start looking for buy opportunity. Also, if you draw your zone, your danger zone, so this is our line where the market breach. So here we can consider this point. These measures of dangers is basically major supply and demand areas. So we can say, okay, let's use this color. Yeah, so we are going to be looking for what? We are going to be looking for more buy opportunity until we get to this danger zone. If the market break this danger zone, and then we continue looking for what? Continue looking for more buys in respect to Fantastic 5. Look at, from this point, I will also show you on GU, I will show you on AUD. From this point, Fantastic 5 is everywhere. Even when you go to H4, Fantastic 5 is everywhere. So if you can understand, if you can analyze the market, looking at Fantastic 5, looking at market structure, a multi-time frame market structure analysis, looking at market structure, and also looking at how market move in respect to Fantastic 5, you will find a lot of trading opportunity to back a lot of money. So here, we're going to be looking for more buy coming next week, right? When the market comes back to that point, we are going to look for what? Entry confirmation on H1 M30. H1 M30, then we buy. So this is how to actually analyze the market using market structure, Fantastic 5, multi-time frame analysis, and all of that. By the time you start knowing how to look at Fantastic 5, how to analyze the market in respect to Fantastic 5 down to the lower time frame, you will always win. Your win is going to be more, right? A lot of opportunity happenings in last week to this week only on NZD USD. Then we are trading a GPB USD, we are trading AUD USD, we are trading gold. About 4-5 pairs that respect Fantastic 5, right? So it will have been a lot of trading opportunity if you know how this market move. So most of the this is how to actually understand market structure, or this is how to do top-down analysis using Fantastic 5 so that we can have a good entry. Here is a very beautiful opportunity last week. And here this week is another beautiful opportunity here from this manipulation entry formula here. Beautiful opportunity. We buy last week, this week, beautiful opportunity, and maybe tomorrow or by Monday, another opportunity, right? So patience will pay the fees. So this is how to actually have consistency while trading this concept. So any questions so far? So we can analyze another pair with we can analyze GU, or we can analyze AUD USD in respect to market structure and Fantastic 5. How market move in respect to Fantastic 5.